go, boys. What's good, my little manager munchkin? Let's talk about today's trade. We finally got a trade. It's been forever, bro. This is the first trade on the entire week because price has been so roopity poopy goopy. It's that September price action. All right. So let's go over this for you guys. First thing I'm looking at is daily bias, right? How do I decide what my daily bias is? I'm on the 4-hour chart, okay? All I'm looking for is, and I made an Instagram video about this. If you're not following my Instagram, follow my Instagram. All I look for in daily bias is what are we respecting, what are we disrespecting. So boom, you see this bearish 4-hour gap, right? What happens? We disrespect it by closing above it right here, okay? And then, so we're disrespecting the bearish fair value gap. Now what are we respecting? We're respecting this bullish imbalance, this bullish new week opening gap, okay? So look, price comes down, forms a bearish fair value gap, come down, fill this entire bullish fair value gap, new day opening gap, completely wick it out, and then we inverse this. And we're also at all-time highs, so it's just a bullish bias, okay? Instantly going on into the day, we have London lows here, sell-side liquidity, whatnot. We had this sell-side liquidity as well, okay? First day macro, or first AM macro, yes, there was a setup, and I have a lot of people who took it, and, you know, I honestly don't know if I should have taken this or not. This is what it was looking like. We had AM high right here at the time. Boom, we just swept out this sell-side liquidity. We had a market structure shift right here and a fair value gap right here. I was looking for this, but then we had this massive candle just shoot up. And for me, I like to enter off the first presented fair value gap because if I enter off this fair value gap in this scenario, I'm betting that we're not just going to completely shoot down and completely just disrespect this fair value gap, right? So it's just kind of a little bit more risky in my eyes. But why I think I honestly could have been okay taking this is because we didn't take out any liquidity. It wasn't like we swept a high right here and then we came down in this fair value gap. So I think I honestly should have been good taking this. But again, I just don't like it because we technically inverse this on this candle right here. And it's just a little less probability for me. But this was a really good setup. It was actually a unicorn model. We had a breaker block overlapping the fair value gap. So that was good. I know a lot of people who took that. I didn't take it though because, again, I just told you guys it kind of ran without me. But it didn't take liquidity. So I was kind of 50-50 on that. And so then going into this, I was like, okay, obviously we're still bullish. I don't want to take a sell into these 15-minute gap or these 5-minute gaps because I know we're probably just going to go down into it and then continue higher. So I took that knowledge and I said, okay, we have this 15-minute gap here, okay? I'm going to wait for the second day macro, right? We're obviously bullish, right? We've just inversed this 15-minute gap. We've just closed above these highs pretty aggressively. So boom, our 15-minute gap starts here, and we have a little bit of minor sell-side liquidity right there, right? So what are my checklists? I need a liquidity sweep, I need a market structure shift, and a fair value gap. So I identify a liquidity pool, a minor sell-side liquidity within our 15-minute gap. We come down, sweep it, okay? We come up, we close above this swing high right here, and it also happens on ES right here, okay? And then while we do that, we also form a fair value gap right here. We also do the exact same thing on ES. We also have a breaker block. Why is this a breaker block? Because we have a low, a high, a lower low, and a higher high. The last up closing candle before the move down, right? So our breaker block is overlapping with our fair value gap, so it's a unicorn model, right? And as you can see, once we form this fair value gap, we don't run up and take out these highs or these highs. We come back down and we trade down into our fair value gap. I get my entry and I take 25% off at 1-to-1 and I go break even. And usually I just hold the rest to a 2RR for a fixed 2RR for a 1.7% gain or 1.7R gain, right? Today was a little bit different. Where else are we supposed to go besides all-time highs? You know what I mean? It's not like we're just going to stop at 2RR when we have this extreme high confluence liquidity pool, literally all-time highs, just sitting right here. Where else are we supposed to go? So the idea behind this trade is, boom, We come up, confirming that we're bullish, and then we come back down to rebalance price, and then continue higher to our next liquidity pool, which is exactly what I took. So this was a 2.6R. Usually I just hold it to here, but it was a little bit different today because of just overall narrative and just bias. But yeah, that was the trade for today, guys. Hopefully I'll see you guys tomorrow. I'll be interested to see if we get a trade tomorrow. I love you guys. Stay blessed and peace.